Welcome to the Iraqi Dinar Update channel, your trusted source for the latest news, analysis, and insights on the Iraqi dinar. We provide up-to-date information on exchange rates, economic developments, and key financial trends affecting Iraq's currency. Whether you're an investor, trader, or simply keeping an eye on the market, our channel delivers accurate reports, expert opinions, and government policy updates to keep you informed. Stay tuned for real-time updates and in-depth discussions on the future of the Iraqi dinar. Iraq is moving toward issuing a digital currency as part of its broader efforts to reform its financial system and reduce its reliance on the US dollar. The Central Bank of Iraq has been under increasing scrutiny and control due to international financial regulations and US-imposed restrictions, particularly in relation to compliance with anti-money laundering and counterterrorism financing standards. The introduction of a digital currency would not only provide Iraq with greater autonomy over its monetary policy, but also offer a way to modernize its financial system and integrate it more effectively into global markets. The significance of this move extends far beyond just technological advancement. It represents a shift in how Iraq positions itself economically and geopolitically. The statement that this digital currency will have the same value as traditional currencies raises several key questions, especially concerning what is considered the traditional value of the Iraqi dinar. The current official exchange rate of 1310 IQD per USD is a rate set within the constraints of Iraq's financial system, but it does not reflect the historical or potential real value of the currency. Iraq's monetary history has been marked by dramatic fluctuations, economic instability, and external influences, including wars, sanctions, and shifts in oil prices. Historically, the Iraqi dinar held a much stronger value before international interventions and economic downturns altered its standing in global markets. Many who analyze Iraq's financial trajectory argue that the current exchange rate is artificially suppressed due to external pressures, currency auctions, and the heavy reliance on the US dollar for trade and transactions. A digital currency issued by Iraq's central bank could act as a catalyst for economic transformation, offering a mechanism to bypass the dollar-dominated system that currently dictates much of Iraq's financial interactions. The digital nature of the currency could allow for greater efficiency in transactions, reducing the need for physical cash and minimizing the risks of money laundering and corruption that have plagued Iraq's economy. However, the true impact of this initiative will depend on how the digital currency is structured and integrated into the existing financial framework. If it is simply pegged to the dinar at its current exchange rate, it may not initially change the economic landscape significantly. However, if it serves as a stepping stone toward a more freely traded or revalued dinar, it could mark a significant turning point in Iraq's financial independence. The Iraqi government and the Central Bank of Iraq have expressed interest in de-dollarization, a strategy aimed at reducing dependence on the US dollar in trade and domestic transactions. This aligns with broader regional and global trends, as several countries seek alternatives to the dollar in response to geopolitical tensions and economic sanctions. By introducing a digital currency, Iraq could create a parallel financial system that allows for more direct transactions without the constraints imposed by international banking restrictions. The success of this effort would depend on the adoption of digital currency infrastructure, public trust in the new system, and the ability to establish exchange mechanisms that facilitate international trade. One critical factor in determining the future exchange rate of the Iraqi dinar and its digital counterpart is the real effective exchange rate, RER, which accounts for inflation, trade balances, and economic productivity. The current nominal exchange rate of 1310 IQD per USD does not align with Iraq's economic potential, given its substantial oil reserves and strategic position in global energy markets. If Iraq moves toward a more market-driven exchange rate system, whether through a managed float or full liberalization, the dinar's value could shift significantly. A digital currency tied to this transformation would serve as an essential tool in managing monetary policy and stabilizing fluctuations during a transition to a new valuation model. A major question remains regarding how this digital currency will interact with traditional banking and financial institutions. If it is simply another form of the Iraqi dinar, its impact may be limited unless accompanied by broader monetary policy reforms. If, however, it functions as an independent or hybrid currency that allows for direct international transactions, it could redefine Iraq's financial sovereignty. The key to success will be ensuring that the digital currency is widely accepted, secure, and integrated into both domestic and international markets. The role of the International Monetary Fund, IMF, the World Bank, and other financial regulators in overseeing and supporting this transition will also be critical. The transition to a digital currency also raises questions about liquidity and convertibility. If Iraq's central bank issues a digital currency with the same value as the traditional dinar, it must ensure that there is enough confidence in the system for people to adopt it. One potential approach could be linking the digital currency to Iraq's oil revenues, creating a form of backing that supports its value in international markets. This would distinguish it from purely speculative digital assets and place it in the category of state-backed digital currencies, similar to initiatives being explored by other central banks worldwide. The future of Iraq's exchange rate and the valuation of its currency are ultimately tied to its economic policies, fiscal discipline, and global market conditions. If Iraq takes a strategic approach to currency reform, including phasing out dependency on currency auctions and ensuring that its digital currency is backed by real economic assets, it could create a foundation for a much stronger valuation of the dinar. The concept of traditional value for the dinar is complex, as it depends on which historical period one considers. Ultimately, Iraq's digital currency initiative represents more than just a technological shift. It is a strategic move toward financial sovereignty and monetary reform. The key to its success will be in how it is implemented, whether it is backed by tangible economic assets, and how it fits into the broader global financial system. The potential for a new exchange rate is not just speculation. It is an inevitable reality as Iraq moves away from restrictive monetary policies and embraces a more independent and market-driven financial future. Thank you for tuning in to the Iraqi Dinar Update channel. We appreciate your support and engagement as we continue to bring you the latest news, analysis, and updates on the Iraqi dinar. Be sure to subscribe and turn on notifications so you never miss an important update. Stay connected with us for real-time insights, expert discussions, and market trends. Until next time, stay informed and keep watching for the latest on the Iraqi dinar. See you in the next update.